Lastly, for problem 17.5a, we are going to look at the profitability ratios. So in this question, the profitability ratios, if we look at our required information here, they want us to calculate the profit margin, they want us to calculate return on total assets, and return on common shareholders' equity. So those are the three profitability ratios that we're going to do in this question. So the first one that we're going to do is the profit margin. Now we've dealt with profit margin before, gross margin percentage, so same type of thing. The profit margin measures your ability to earn net income from sales. So how efficiently are we at earning net income? What's our net income compared to our total revenue? This is answered as a percentage. So we are going to multiply by 100%. We've done this calculation before. It's your profit over your net sales times 100%. So if we're using the information from this question, our profit is $45,216. Our net sales, which is our sales, less our sales returns and allowances and sales discounts, is $966,000. This question gives us the net sales amount. You won't always get that. So when we do the calculation, we'll just go over to profit margin here. You're going to have $45,216 over $966,000 times 100% gives us 4.7%. So the profit margin is answered as a percentage, 4.7%. I'm not going to spend a lot of time on that one because we have talked about that one before. The next one that we're going to do is the return on total assets. So return on total assets is J. And if we look at our sheet of ratios, return on total assets, where do we find that one? That is 13. So 13, return on total assets is your profit over your average total assets. So there's that average word again, times 100%. So basically they're saying for return on total assets is how well are we using our assets to earn a profit? Okay, and then we would compare that to other companies in the industry. So how well are we using our assets to earn a profit? So return on total assets, when we do our calculation, you are going to have profit divided by average total assets. So average total assets is your total assets from 2020 and your total assets from 2019. Add the two together, 50,640 plus 432,720, divide it by 2 to get your average. Then take your 45,216, divide it by that average number, multiply that whole thing by 100%, you should get 9.7%. Okay, so our return on our total assets as a company is 9.7%. We're going to compare that to industry average in order to figure out how well we're doing there. The last one that we have is return on common shareholders' equity. So that's a number that our owners or our common shareholders are going to want to know. It's going to help them figure out how well their investment is doing. What is their success in earning income, or what is our success in earning income for our owners? So this calculation, return on common shareholders' equity, that's number 5 on our formula sheet. So it's profit, subtract preferred dividends, because remember this is just for the common shareholders, divide it by your average common shareholders equity. So average common shareholders equity, again, you'll need 2 years worth, divide by 2. So if we look at this question, our profit is 45,216. So there's our profit. There are no dividends in this question because if we look at or no preferred dividends, if we look at our balance sheet, we only have common shares. We don't have preferred shareholders, so there are going to be no preferred dividends. So it's going to be 45,216 subtract 0. Then you need your average common shareholders equity. Our common shareholders equity, in this case, they don't have that added up for us, so it's the value of our common shares plus the retained earnings. Both of these belong to the common shareholders. So this plus this is our average, or is our common shareholders equity for 2020. So that's 324,600. Then we need to know what is our common shareholders equity for 2019. Well, let's look at our extra information here. And they're telling us that we have $192,000 in common shares, $107,640 in retained earnings. So that gives us $299,640. So if we look at our formula, then we have profit, subtract preferred dividends, okay, over top of common shareholders equity for 2020, common shareholders equity for 2019, divided by 2. Okay, do this calculation, multiply by 100%, you should get 14.5%. So we would say that our common shareholders have a 14.5% return on their equity. Now, in order to figure out if that's good or not, we're going to look at industry average. So we'll turn back to that page 1122, Exhibit 1711. So first of all, we're going to look at our profit margin. And the profit margin here, industry average is 14%. Okay, so industry average profit margin, 14%. If we look at ours, it was 4.7%. Well, when you're talking about a profit margin, the higher the better. That means you had higher profits. So 4.7% compares unfavorably to industry average 14%. Okay, we're not doing as well as the industry. Next, let's look at the return on total assets margin. So, return on total assets, if we look here, return on total assets, industry average is 20%. Okay, let's look at ours. We're at 9.7%. So we compare unfavorably to industry average. Okay, when you have the word return, the higher the return, the better. Our return is quite a bit lower. So compares unfavorably to industry average and industry average is 20%. All right. Last one we want to look at is return on common shareholders equity. So have a look here. Return on common shareholders equity, industry average is 32.7%. 32.7%. So let's have a look here. Our industry average is 14.5%. Okay. In the industry, most shareholders have a return of 32.7%. Our shareholders are getting a return of 14.5%. That's not going to look very good to our shareholders. It's unfavorable. So compares unfavorably to industry average, and industry average was 32.7%. So those are all of the ratios from that question. Have a look through all of those and then continue on with your assignment.